Going from a daily to weekly chart can help clarify longer-term price action. 450 is a central multi-decade level as it is a large-scale ascending triangle and double bottom. The other levels are also highly valid as they have plenty of role reversal, but they likely won't be relevant for a long time. This is because a long period of trading around 450 begins after peaking during the tech bubble crash from the year 2000. During another major uptrend back towards 450, there is a clear ascending triangle and declined double top during the relatively stable incline. These are quite wide, considering they're shown on a weekly chart. Returning to a daily chart allows for the outline of more precise ranges. A return to the weekly chart allows for a clear view of the uptrend's progress and the high validity of the uptrend line. Similar to other charts with long-term downtrends, there can be an eventual decline of bearish sentiment around a long-term barrier like 450. Not surprisingly, 450 is the focal point of support during a sharp drop. This is shown by the 3 candles contacting it, with most of their real bodies over 450 and lower wicks under it. 760 to 725 provides a clear long-term resistance range that even marks the upper wick from high volatility in early 2021. A look back reveals 760 to 725 to be even more valid as they crossed through several major landmarks including normal swing points and the upper boundary of the large double bottom shown at the start of the case study. A monthly chart also reveals similar results and more clear price action to mark the significant resistance range. Going back to a daily chart reveals resistance to stem from gap downs, a failed ascending triangle, and a broken upward channel. This leads to the marking of the 698 to 682 range, mainly derived from the failed ascending triangle and the gap down, to cross through the real body of the large bearish star in early 2021. The patterns are visible on the weekly chart as well, since they are already marked, but they would have been most easy to identify at the time of their formations using the finer detail of a daily chart. Another look back at the long term reveals the 698 to 682 range to also line up with major landmarks for further validity. This case study has primarily been an exercise in utilizing the benefits of switching from various time frames to reveal comprehensive details of chart patterns and general price action from long-term significance to finer short-term details.